You didn't lose that trade. You lost it before you even clicked. Because the worst trade you'll ever take isn't the one that hits your stop. It's the one you missed and then tried to chase. You were watching it, same chart, same level, you marked it hours ago. You literally told yourself, if price taps this, I'm in. And then it tapped, perfectly, and you didn't take it. Not because the setup was bad, not because you didn't see it. You hesitated, and in that hesitation something shifts. It's not dramatic, it's subtle, a flicker of doubt. A quiet voice somewhere underneath the confidence, just loud enough to make your hand pause. Let me just wait for confirmation. Let me see one more candle. I don't want to get wicked out again. So you wait. You sit there, watching, hovering, not quite in and not quite out. One candle closes, then another, you're still watching, and then price moves, fast. One candle, two candles, three, strong, convincing, clean. Exactly the move you expected. Exactly what you mapped out, what you told yourself would happen when that level held. The market did its part. It showed up exactly on cue, and you didn't. Now you feel it. That tight, hollow feeling right in the center of your chest. It isn't pain exactly. It's something sharper, something more specific. Your jaw tightens slightly without you realizing it. Your shoulders pull in. Your focus narrows down to a single point on that screen, watching those candles climb without you. You sit up straighter. Your hand finds the mouse without thinking. Okay, it's going. You zoom in. Lower time frame. Eyes scanning for a way in, any way in, some small pullback, some flicker of hesitation from the market that gives you permission to enter. You're not reading the chart the way you were an hour ago. You're searching now, looking for something to tell you what you already want to hear, but there isn't one, not a clean one. Not the kind you would have taken at the start of the session when your mind was fresh and your rules were clear. You missed it, and that thought lands differently than a loss. It hits harder than a red number on your screen. A loss has an explanation. A loss was something you tried. This is something you didn't do. This is a gap between what you knew and what you actually did, and your brain doesn't like that gap. I knew it. I literally called this. Why didn't I just take it? You replay the hesitation. You go back to that moment when the candle formed at your level, when everything was perfect, and you ask yourself what you were waiting for. You can't fully answer it. It felt like caution at the time. It felt like discipline even. But looking at those candles now, moving without you, that hesitation doesn't feel like discipline anymore. It just feels like a mistake. Price keeps pushing. Now it's extended, far from where you would have entered, far from where the risk made sense. But you're not calculating risk right now. You're not looking at the chart the way you were trained to look at it. You're not thinking in terms of structure and probability. You're watching that move that was yours. And some part of your brain has decided quietly, without announcing it, that you still deserve to be in it. You see momentum. You see confirmation. You see proof that you were right. And proof feels like an opportunity. The move being right validates everything. Your analysis, your level, your read of the market. And if your read was right, then maybe it's not too late. Maybe the move has more in it. Maybe there's still a way to get what you were supposed to get. And now your brain starts negotiating. Okay, it's fine. I can still get in. There'll be a pullback, just a small one. Then it'll keep going. The structure is still valid. I just need a better entry. You're not following a setup anymore. You know this. Some part of you, some quiet, clear part that doesn't speak very loud right now, knows that what you're doing isn't the same as what you planned. But that part gets pushed aside easily when the other voices are this loud, this urgent, this convincing. You're not chasing profit right now. You're chasing something else. Price pauses. Just slightly, a breath. One small red candle pushing back against the move. Not a reversal, not even a proper pullback, just a pause. A tiny exhale from the market before it decides what to do next. Your heart speeds up. That's it. That's the pullback. You look at where price is. It's nowhere near your original level. It's not at a new level either. It's just somewhere in the middle of the move, slightly lower than the last candle, slightly higher than where you entered your mind. It's not clean. You know it's not clean. You've seen clean entries before. You've marked them. You've planned them. This isn't one of them, but it's enough. Just enough to justify it. Just enough to let the other voices win. You move your cursor over the buy button. You hover there for a second. And in that second, somewhere in the background of all the noise, there's a split second of clarity. A brief, still moment where you actually feel it. Where some part of you registers clearly and without confusion that this isn't your trade. Not the one you planned. Not the one you prepared for. This is something else. You feel it. And then you override it. I'll just use a tighter stop. Click, you're in. And instantly, the first thing you feel is not excitement. It's not the rush you expected. It's not the thrill of finally being part of the move. It's relief. A quiet, exhaled, almost physical sense of relief. Like you fixed something. Like you solved a problem that was bothering you. Because now you're in the trade. Now you're part of the move. You didn't miss it after all. You found a way back in. You fixed the feeling. Price ticks up just a little. 1 or 2 points in your favor, small but visible, and your brain immediately latches onto it. See, good entry. For a moment, the tension breaks. The tightness in your chest loosens slightly. Your breathing slows down a little. You sit back. You even half smile maybe, because it worked. The entry held. Price is moving. The discomfort of missing the original setup starts to fade because right now, in this moment, you don't look wrong. But something's different. The candles slow down, not dramatically. Not in an obvious alarm bell kind of way, just subtly. The urgency that was driving price forward a few minutes ago has softened. The candles are smaller now. They're forming more slowly, taking their time, as if the market has lost interest in the direction it was sprinting toward. Volume drops. You don't pull up the volume indicator. You're not looking at any of that right now. You're watching the price, watching your P and L, watching for confirmation that this is still working. But you feel something. That subtle background discomfort again. Not a clear warning, not a loud alarm. Just a faint unease that settles in somewhere behind your ribs, quiet enough to ignore if you want to, but present enough that it's there. Price stalls, goes sideways, your P and L flickers, small green. Back to zero, tiny red. Green again, it's doing nothing, just hovering there while you wait, willing it to move. You lean closer to the screen. Come on. The word forms in your head like a whispered instruction to the market, as if it can hear you, as if wanting it hard enough changes anything about what's happening in that chart. Then it happens. One sharp, decisive move against you. Not a drift, not a slow grind. A fast, aggressive push in the opposite direction, moving with the kind of confidence that your entry never had. No hesitation in those candles. No slowing down, straight through your stop. Closed, done, you stare at the screen. For a second, it doesn't feel real. The number is there, the loss is confirmed, the trade is over. But your brain takes a moment to process it, to catch up to what just happened, to move from the version of events where this was going to work out into the version where it didn't. Then price continues, in the opposite direction, clean, fast, deliberate, moving exactly the way a trade moves when the market has decided, not pausing, not looking back, and now it's obvious. It's obvious in the way that things are always obvious after the fact. The kind of obvious that feels cruel because you were watching the whole time, because you had all the information, because there was nothing hidden from you. That wasn't continuation. That was the end. You didn't enter the move. You entered the exit. The move was real. It happened. Your level worked. Your analysis was right. Other traders entered where you were supposed to enter, at the level you drew, at the moment you had planned, and they rode that move to its natural conclusion. And at the very end of that move, when those traders were scaling out, when the smart money was quietly closing positions and booking profits, when the last push of energy was being used up. That's when you entered. You were the liquidity they needed to exit into. Your loss was their profit on the way out. And now, sitting with that knowledge, your brain starts doing what it always does. It starts replaying everything. I knew that level. I marked it perfectly. If I just entered earlier, if I hadn't hesitated, and that part is true. If you had taken the original entry, this would have been a winning trade. Your analysis would have been confirmed. You would have been one of the early participants, riding the move, not chasing it. But that's not the real mistake. The hesitation at the beginning, that first pause when price tapped your level and you waited for one more candle, that was uncomfortable, but it wasn't catastrophic. Missed trades happen. Clean setups form and get passed over all the time. Every experienced trader has a folder of trades they didn't take that worked out perfectly. Missing a trade is neutral. It only becomes a problem when it doesn't feel neutral. That moment, after the hesitation, after the miss, when watching price move without you started to feel like something was being taken from you. That moment when missing, the trade stopped feeling like a past opportunity and started feeling like a loss. That's where everything broke. Because once missing a trade feels like losing, the entire framework of decision-making collapses. You weren't trying to follow your system anymore. Your system was clear. Your system told you exactly when to enter, where to set your risk, and when the opportunity was valid. Your system didn't tell you to enter 3 candles into the move at a spot that had no structural significance. You were trying to fix a feeling, that uncomfortable gap. That specific, gnawing discomfort that comes from knowing you were right and not acting on it. Your brain created that gap the moment the hesitation became a miss, and then it spent every second after that trying to close it. And the fastest way to close it was an entry, any entry. Because being in the trade means you're not missing it. Being in the trade means the miss never happened. Being in the trade means you get to be right after all. That's why it always feels the same. You hesitate, then you chase, then you lose. Then you sit in the quiet afterward and tell yourself that next time you'll just take the original entry. You'll be more disciplined. You'll trust your level, you'll follow the plan, and you mean it. You fully mean it when you say it. But next time comes around and price taps your level, and that same flicker of doubt surfaces again, and you hesitate again. And then the same sequence starts to play out. Because hesitation isn't really the problem. Hesitation is a symptom. It's what happens when 2 things are competing with each other inside you. One part of you sees the trade clearly and wants to take it. Another part of you is afraid of being wrong. Not afraid of losing money necessarily, afraid of being wrong. Afraid of taking action and having that action fail. Afraid of what that might mean about your read, your skill, your judgment. So you wait. You look for one more piece of evidence, one more candle, one more signal, something that will turn the probability into certainty, something that will guarantee the outcome before you commit to it. And the market doesn't offer certainty. It never has. It isn't designed to. Every single entry you will ever take in your trading life carries some degree of unknown outcome, and the part of you that's afraid of being wrong cannot fully accept that. No matter how many times you've read about it or heard it explained. So you wait, and then you miss. And then that fear doesn't disappear. It transforms. It flips from fear of being wrong into something else, something more urgent. Something that feels almost like the opposite of fear, but is actually the same energy wearing different clothes. FOMO, not the casual social media kind. Not the vague discomfort of seeing someone else's gains. This is specific, pointed, personal. You're not afraid of missing a profitable trade. You're afraid of missing the proof that you were right. Because you knew, you said so. You marked the level, you watched the price. You had the whole thing mapped out before it happened. And then it happened exactly the way you mapped it out. and you weren't in it. That's not just a missed trade. That feels like a missed opportunity to confirm who you are as a trader. And that fear is much stronger than the fear of losing money on a clean setup. That fear is attached to identity, to the story you tell yourself about whether you actually know what you're doing, to whether the hours you've spent studying this market, building this skill, paying this tuition actually mean anything. So you force yourself in, not to make money, to prove it. Even if the market is already done, even if the move has run its course, even if everything you know about structure and timing and extended price is telling you that this entry is not the same as the one you planned, you enter anyway, just to prove that you were right. And the worst part, the part that makes this cycle so frustrating, the part that makes it so hard to break, is that your analysis wasn't wrong. Your level worked. Your bias was correct. Your reading of the market was accurate. If you had taken the entry at the moment you planned, at the level you drew, at the exact time price tapped it, you would have been right. You would have had a winning trade. The idea was valid from start to finish. Everything was correct, except the timing. And in trading, timing isn't a detail. Timing isn't a minor consideration. Timing is the trade. The idea without the timing is just an idea. The analysis without the execution is just analysis. The level without the entry is just a line on a chart. You didn't execute late. You executed after the opportunity had already expired. That's why it feels so disorienting, because you were right about the move and you still lost. Those two things don't fit together neatly. Being right is supposed to mean winning. Being right is supposed to mean the market rewards you. That's the implicit deal that every trader believes somewhere in the back of their mind. Even if they've been told 100 times, it doesn't work that way. Being right about the direction doesn't guarantee a profitable entry. Being right about the level doesn't mean every point in time at that level is the same entry. The market has a timing that's separate from direction, and those two things have to align, not just one of them. So your brain looks for somewhere to put the blame. The market faked you out. The setup failed. You got stopped out by the spread. The big players hunted your stop. All of these explanations create some distance between you and what actually happened. They make it feel less like a choice and more like something that was done to you. And that distance feels better, at least in the short term. But deep down, underneath all the explanations and the rationalizations and the stories, there's a quieter, more honest voice. The one that knows exactly what happened. The one that doesn't need the explanations. The one that was there in that split second when you hovered over the buy button and felt it wasn't right and clicked anyway. You entered because you couldn't accept missing it, not because the setup was valid, not because the entry met your criteria, not because your system gave you a signal, but because the feeling of being left out of that move was more uncomfortable than the risk of being wrong. And the market doesn't care about feelings. It doesn't reward discomfort. It doesn't compensate for what you went through watching that move without being in it. It doesn't give you the trade back because you were technically right earlier. It just moves. And if your entry aligns with what the market is offering in that moment, it works. If it doesn't, it doesn't. It's that indifferent, it's that simple, and it repeats. Different chart, different day, different pair. Sometimes a different market entirely, but the same sequence, the same rhythm. Watch, wait, miss chase, lose, not because you don't know what to do. You know exactly what to do. You planned it. You drew the level. You told yourself the rule before price even got there. But in that specific moment, in the seconds after the miss, when price is running and the feeling is building, what you know and what you do stop being the same thing. And the gap between them gets filled by something else. Something that feels like logic but moves like emotion. Something that sounds like analysis but responds to urgency. It still has room. Structure hasn't broken. Momentum is still strong. One more push and I'm in profit. each one of those thoughts sounds reasonable. Each one of them could be true in a different context, at a different moment, with a different entry. But none of them are your original plan, and none of them address the real reason you're entering. Underneath all of it, underneath every logical-sounding justification, is one simple thing. You just didn't want to feel left out. That's it. That's the whole thing. And the market punishes that instantly. Not because it's cruel, not because it's designed to trap you, but because the energy behind that kind of entry is reactive, not deliberate. It's responding to what already happened, not positioning for what comes next. And the market, in the aggregate, in the flow of all the participants making all their decisions at every moment, is extremely sensitive to the difference between those two things. Deliberate entries have a different quality to them. They're calm, they're specific, they exist at the intersection of preparation and timing. The trader who took your level when price first tapped it wasn't braver than you. They weren't smarter. They weren't more skilled in any technical sense. They were just in the right mental place at the right moment. They had decided in advance, and when the moment arrived, they acted without needing to override anything. That's not courage. That's preparation that was allowed to do its job. The hard part, the part that doesn't get talked about enough, isn't the first no. The first no is almost automatic. You say no because you're not ready, because you want one more candle, because the voice of doubt is louder than the voice of the plan. The real trade is the second no. The one that comes after the first no turned into a miss. The one that comes when price is already running, when the FOMO is building, when the urgency is telling you to do something, anything. Just don't sit here and watch it go without you. Saying no in that moment isn't passive. It isn't giving up. It isn't accepting defeat. It's recognizing that the thing in front of you is no longer the opportunity you planned for. It looks similar. It has the same label. It involves the same chart, the same market, the same direction. But the conditions are different now. The timing is different. The risk profile is completely different. And being able to see that difference clearly, without the fog of the feeling in your chest clouding everything, that's where the work actually lives. That's where the pattern finally breaks. Not in finding a better system, not in improving your entries technically, not in adding a new indicator or changing your time frame or switching to a different market. In that moment. In the quiet that comes right after the miss. When price is running without you and the pull to chase it is at its strongest, that's the moment. What happens in that moment, what you choose in that moment, what you let yourself feel and what you let yourself do in that moment. That's what determines whether the cycle continues or something slowly starts to shift. Not because you forced a change, not because you made a rule and followed it perfectly, but because at some point, after watching the sequence play out enough times, after sitting with the discomfort of the miss and the bigger discomfort of the chase, after watching yourself from enough of a distance to see the whole thing clearly, the decision starts to feel different. Not easier, not right away, but different. The miss starts to feel like just a miss, not a loss, not a failure, not proof of anything about your skill or your knowledge or your future as a trader. Just a trade that didn't get taken. One occurrence in a long series of occurrences. One moment in a market that will generate another moment soon enough. And when the miss starts to feel like just a miss, the urgency that comes after it starts to feel like what it actually is. Not logic, not analysis, not insight. Just the momentum of an emotion that hasn't been interrupted yet. And that's something you can watch, not fix, not eliminate, not will away through discipline or determination or another set of rules. Just watch yourself hesitate, watch the miss land, watch the urgency build, watch the negotiation begin, watch the cursor move toward the buy button, watch the override happen. Watch it all from a slight distance, the way you might watch something on a screen, with curiosity more than judgment, with recognition more than condemnation. Because the moment you can see it clearly, the whole sequence becomes something different. Not a trap, not a flaw, not evidence of some fundamental problem with who you are as a trader. Just a pattern. A very human, very understandable, very predictable pattern that plays out in the space between knowing and doing, between planning and executing, between the trader you intend to be and the one who shows up when the market moves without you. And patterns that are seen clearly can change, not overnight, not after one video, not after one session where you manage to let the chase trade go, but slowly, genuinely, from the inside out. If any of that felt familiar, if any part of that story had your name on it, leave a comment below with the word chase. Not to confess anything, not because it means you're doing something wrong. Just because recognizing yourself in something is worth acknowledging. And if you want more of this, more of these specific, quiet, honest looks at what actually happens inside a trader's mind in the moments that matter most, subscribe. Because this is what this channel is for, nothing else, just this.